workforce. Back to you.
All right, Simon Hobbs, thank you so much. John Hofmeister is the founder and CEO of Citizens for Affordable Energy. He is also the former president of Shell Oil, and he joins us now. John, thank you so much for joining us. As somebody who spent so much time at the head of an international oil company, how big of an impact do you think this has on the flow of oil around the world and ultimately the price of it?
Well, oil does not like political instability, because everything that oil does is so long-term. It takes decades sometimes to get projects through, and there's so much capital intensity that you just don't want to put it at risk. And so any instability, particularly instability which looks like it might spread, immediately creates a psychology of fear, a psychology of concern. And so whether you see it reflected in the oil price, whether you see it reflected in decisions that might be taken not to put additional ships through the Suez for fear of something that might happen, this is real-time insecurity that's going to really cause consumers to have to worry about this.
Go ahead.
Well, there are two sides of the oil market. I think you mentioned both of them. There's the fear and then there's the reality of it. You talked about the fear. What do you think the reality is? I mean, how much flow do you think could really be disrupted? We are talking about 1 million barrels of oil that travels through the Suez Canal, which is a lot, but is, you know, maybe 1% of the world oil supply every day.
Well, it's 1 million barrels today. How many million barrels next week or next month in a period of uncertainty? And what it causes governments to do is really double down on where are their sources coming from. It prompts speculators to buy high because they're going to want oil virtually at any cost, because really the West its economy is based on oil, and you can't do without it. There may be elected officials, including the U.S. president, who thinks oil is past tense. But remember, 85 million barrels a day, 20 million barrels in the U.S. If 1 million becomes 2 million under concern, suddenly the price is going to escalate dramatically, which then has repercussions as a tax, if you will, on otherwise recovering economies.
So let's talk about that and play that out a little bit, Mr. Hofmeister. Oil is at about $90 a barrel on the NYMEX market as we open tomorrow. Where do you think it might go?
Well, since December, I've been saying in many, many public forums that if we stay on the path we are on as a world, not just the United States, but as a world, we're going to push into triple digits very soon this spring, and we're going to find ourselves in an escalating price period just like 2007, 2008. Because the fundamental production side of oil, in the face of increased demand, has basically not increased. There is some overhang in OPEC cutbacks from the recession, but that'll be eaten up very quickly. And suddenly we have a new price dimension. And it's the new price dimension of geopolitical instability, not just in Egypt and Tunisia, but who knows where next. And so it's that combination of factors, which I said by December or November 2012, we could be at the 150 level. We could see $5 gasoline in this country. And it really begs the question, if we do not do something in the United States to produce our own domestic oil in the face of this kind of insecurity, shame on us.
Yeah. All right. That's a good note to end on. John Hofmeister, thanks so much for joining us. We appreciate it.